Hey guys, good afternoon, everybody. Today is Monday, June 12th. It is 2:02 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm gonna go ahead and set up this room real quick, and then we'll get started shortly in a few moments. So if you guys have any questions, feel free to put your questions in the chat. We'll answer questions in the order that they come in. And we'll get started shortly. So just let me finish setting this up real quick, and we can get started with this in a few moments. There's a couple of things here to update. Sorry, I'm just kind of lazy right now. I just had a big lunch, so I'm like chilling. I was chilling with the dogs, and then just realized it was 2 o'clock. So maybe I just finish setting this up. That looks good. Looks good. All right, let me get this link sent out to you guys here in the premium. Looks good. So let's get a few moments for people to make their way in, and then we'll get started as soon as people join. All right. All right, guys. Good afternoon, everybody. Looks like people are slowly making their way into the room. If you guys have any questions, feel free to put your questions in the chat, and then we'll answer your questions in the order that they come in. We don't have any specific questions lined up, so I mean this session is going to run for as long as we have questions. So I don't mind how long we have to stay on here. I'm gonna answer every question you guys have, and I'm gonna try to help you guys, figure out whatever you guys need help with. Hey, Glenn, how's it going? Hey, CJ. All right, so I'll just give it a few more moments. I just sent the link out, guys. Today's Monday, June 12th. It is 2:04 right now. Scheduled mentoring sessions for 2 o'clock. So yeah, whatever questions you guys have, feel free to put them in the chat, and then we'll cover them as they come in. So first question over here is from Hussein. Hussein said, hi, Sean, hope you're doing well. Definitely doing great. Can you go through a bit about money management? If anyone has a 100K FTMO account, how should he go about his risk management? So I mean, it really just depends, Hussein. Like, it depends on like what trade you plan on taking, right? Because everybody's different. So there's like certain people who only take the liquidity push on open. If that's the only trade they're taking, then they can risk like 3% on that trade if they're just taking one trade, right? Because that trade doesn't lose very often. There's actually a lot of people in the group who only take that trade. So put it this way. Let me know like what your plan is, Hussein. Like if you plan on taking multiple trades during the session, I'll try to give you a rundown because I want to cater this specifically to you. Obviously this response is going to be different by the person. Like there's a good amount of people in the group who only want to take like one trade a day. For them, I would basically tell them to take like a 3% risk, right? Like for me personally, I would basically take a 3% risk because I understand the risk that's involved with that specific trade. And if I lose a trade, I'm usually going to be done. Like for example, today, I lost that first trade. I was doing a 3% risk, right? Or somewhere around there. So here's my first trade from today. I lost 5,000 on the trade. Let me do the math. I don't know what the risk was on that, but it was around like 1.5 to 3%. So I could lose, or let's see, I had a 200K account, right? Divided by 5,780. Sorry, wrong. I did it backwards. 5,780 divided by 200,000. So I risked about 2.8% on that specific trade, this one right here. Because typically, like, I'm taking like 1 or 2 trades a day. So I'm taking about a 3% risk on that trade. On this next entry right here, I ended up entering it with only a 100 pip stop loss. So I was risking about like 2000. Okay, so let me do the math for that. 2000 divided by 200,000. I was risking like 1%. So I was risking about 2.8% on the initial trade. And then on the second trade, I was risking about 1%. So I was still within the parameters of 5% for the day. Obviously, the way that I do things are different compared to everybody else. Not everybody can make those types of decisions as quickly. I just punch in different numbers into my quick trade manager with the stop loss, and then it pretty much minimizes my risk. So it just depends on like what you're planning on doing. You're saying like if you're able to change your risk very quickly, I would keep your risk at 3% for the entire day, right? That's what it should be. You should never go over 4%, because if you go over 4%, then you can easily hit your daily loss limit. So it just depends by the person. So for you, Hussein, I don't know what you plan on doing. If you plan on taking the liquidity push, then you might want to risk 1.5%. So if you're doing a 1.5% risk with a 100K account, or you can even do up to 2% risk. It just depends on, again, it depends on your situation, right? If you plan on taking multiple trades, you should be doing a 3% risk per day. It depends on how many losses you plan on taking. For me, usually one or two losses and I'm done for the day. But for you, I don't know if you want to take 3, 5 trades, right? You just have to split up your risk amongst those trades. So it just depends on like what you're planning on doing. So if you want to do this, so you're doing a 100K account and then you want to do a 3% risk, you just got to split it up amongst how many trades you plan on taking. Like, I think you got to make the decision about like how many trades do you plan on, like, are you okay with losing for that day? For me, 1 or 2 trades is max. If you want to lose more than that, then you just do the math, right? So like times 3, this is how much you want to risk per day on a 100K account. So you're just going to split up the risk depending on how many trades you plan on losing. Obviously, I don't plan on ever losing any trades, but you have to plan for a loss, at least 1 or 2 losses a day. Gotcha. Okay. So you only want to take the liquidity push on open. So if that's the case, then you could do the full 3,000 risk, because the thing is that trade doesn't lose very often, right? So if you do, it's like, say, for example, you did a liquidity push every day this week, right? Maybe you would have won today, maybe you would have won tomorrow. Odds of it, like you're going to balance out eventually by the end of, whatever time that is, by the end of the week. So like, for example, if you lost today and you won tomorrow and then you won the day after that, you'd be up 3%. So if you're on a 100K account, let me just put the numbers into my quick trade manager. I did the math on this prior, but I'm just going to do it again because it's just, and I think this is probably the best way to do it, Hussein. I think you're making the right decision by doing this, because a lot of people started doing this too. They just take the liquidity push on open, and they've been pretty much profitable because the strategy is pretty profitable as is, as long as you follow it as I mentioned. So you're doing a 3% risk on a 100 lot. You could do a 100 lot. Oh yeah, that's about it. You do 100 lot. So if you're doing a 100 lot size with the 100K account, you're going to risk 3,000 to make 3,000. It's a 1-to-1 risk to reward. So if that's the only trade that you plan on taking, Hussein, then you can use that. Just use 100 lot size, go for 300 pips, whether it be to the upside, to the downside. And then that will be your trade for the day. Whether you win or lose, that's going to be your trade for the day. So let's see. Let me read your question, Hussein, because there's a lot of questions here. Let me just scroll through. So Hussein, I plan on doing liquidity push only. So, okay, so only the first liquidity push, and then, gosh, okay. Yeah, so Hussein said, yeah, I took liquidity push today with you along with a wide stop loss, and it did hit TP. Nice. So if you want to use a wider TP, then you can just lower your lot size, Hussein. So I'm not sure if you have the quick trade manager on your I mean, you know what it looks like, the quick trade manager. I was gonna take a screenshot of it, but you already know what it looks like. You can just play around with the numbers. So what you're looking for is for your stop loss to not be anywhere more than 3,000. So let me just take a screenshot of this real quick. If I can. Okay, so here's I mean, you guys know what the quick trade manager looks like. Let me see if we can just pull it up and just make it a little wider. So it's pretty easy for you to figure out, Hussein, because what you want to do here is you just want to make sure that this right here is always 3,000, right? So you can always play around with the lot size. And then, for example, it's 300 pips stop loss, right? If you want to use a wider stop loss, which is perfectly fine, you know, if you want some cushion there, you can change it to like 500, right? Say, for example, you want 500. And then if that's the case, you just lower your lot size. So I'll take a screenshot of this and I'll show you the difference. And you're still like, you're pretty much risking the same amount. You just, you know, adjust your lot size. So I think it's 55, 57, I think. 59, 60. Okay, there we go. Let me take a screenshot of this right here. So I mean, it's the same difference. It's just, you're just making small adjustments to satisfy the criteria so that you're not, you want to make sure that you never blow your account. I think that's the main thing. You know, it's okay to lose a trade and then survive and then make it back the next day. But you can see right here. So if you want to use a 500 pip stop loss, you just change your lot size to 60. So like if you want to go for 300 pips, you can use 100 lot if this is the only trade you plan on taking for the day. And then if you want to do a, you know, a bigger TP or bigger stop loss, you just change your lot size. And then when you change it, you'll see that the numbers here will adjust. Your TP, you know, like some people like really want that one-to-one risk reward, but in reality, you just want to make sure you don't lose a trade, right? If you don't lose a trade and you win partial profit or you win full profit, your profits are just going to add up. This strategy has a very high win rate. So your main goal is just not to lose a trade. If you can stay within your risk, 3,000 risk, 3%, you can lose a trade back to back to back. Or you can lose like, you can lose like three days back to back to back before you're in trouble. So odds of that happening are very unlikely, right? So this is how you'd make the adjustments, Hussein. You would just change the number for your lot size, but you just want to make sure that your stop loss here is always going to be at 3,000 so that you like your main goal is just not to lose, or if you are to lose, minimize your risk as much as possible. And then the next day you'll take the trade and, you know, you'll probably hit your TP most likely. And then from there, you're just going to recover, and then you're going to make your profit back. And this is going to help you stay within your parameters. I think this is the main problem why a lot of people fail their FTMO is because they over leverage. Like they go from like 300 stop loss or 300 pip stop loss to 500, but they don't change their lot size. They keep it at 100, and it goes from a 3,000 risk to a 5,000 risk. And then you lose one trade and you blow your account. So yeah, if that's the case, Hussein, just make sure to play around with this and just make sure your stop loss is going to be set at 3,000 at basically at all times. And that's the most that you want to lose in one day if you are on a 100K account. All right, perfect. Yeah, no problem, Hussein. You know, that's a common issue with a lot of people. I feel like more people fail their FTMOs from the daily loss limit than the max loss limit, which is crazy because, you know, people just they get that feeling where they need a revenge trade. And then when they revenge trade, it just goes downhill from there. But since you're on that plan, Hussein, where you just want to take one trade a day, I think this will make it like almost impossible for you to blow your account. Because the thing is, the liquidity push on open, you might have a loss here and there, but for the most part, you're going to have more wins. So either way, it's going to balance out. You might have a loss today, or you might have a win today, and then tomorrow it'll just keep, you know, it'll just keep adding up. So you're going to be going in an upwards motion. All right, cool. No problem, Hussein. If there's any other questions regarding that, let me know. I know with a lot of people, risk management is probably like one of the biggest issues. So that's one of the things that we have to delve into. But everybody's case is a little different. So just depending on your situation here, I think you're taking the best route. And that's probably the route that I'd probably recommend a lot of people to take as well if they're trying to pass a challenge. because that strategy is an easy strategy. You just take one trade a day, and then you either win or you lose. Most of the time, you're going to win. So it'll just add up from there. Anyways, all done with that question, Hussein. Let me scroll up real quick. I see your question, Sam, and I see your question, Glenn and Chase and Barty. So I'm going to go over the questions here in the Zoom first. And then once I'm done with these questions, I'll go over to the YouTube and I'll answer your guys' questions as well. Okay, let's see. So one question from Aiden is, hey, Sean, I'm having trouble with the liquidity entry. I understand that the entry is as it touches, but I am either missing the original touch or planning to wait based on your analysis because of market movement, risky entry, etc. But then I struggle to find when to actually enter. So I either end up entering too early on the retest or missing it altogether. Not sure how you could best help, but could you maybe go over what a retest to liquidity actually looks like? So typically and I'll mark up the liquidity from today. Let me just go over here real quick. So let's just replay the market from this morning. Like for example, today I got in a little early. I got in just a little too early for that liquidity push. I should have waited too, but you know, today's Monday. I don't know if you guys ever get that feeling on Monday where you just want to get into a trade and you really don't want to miss it. And that kind of screwed me over today because if I waited a little bit longer, it would have been perfect. Usually I'm pretty good with my patience, but today I just didn't have patience for it because I got kind of annoyed of like the losses that well, not really losses, the trade that I missed last week, where I was like, oh, I'm not going to miss this one today. And I ended up taking it too early and I got stopped out. Luckily, I got back in on the retest or on the V1 variation back to the upside because I knew price was going to go up. But I'll show you what you should be looking for. So I'm just going to mark up the closest liquidity, guys, because that's what the trade was based off today. Let's go down to the 8-hour. Yeah, I'm just gonna mark what the closest liquidity was, or I'm not gonna mark the lower liquidities because we took the buy today. So I'm not even gonna care about the lower ones. I'm just gonna mark the higher ones just for this example, so that I can kind of go over with Aiden like my thought process and what could have been done differently. Because I could have done a lot of things differently today, but with market being Monday, I just had that feeling where I really wanted to take the liquidity push because I missed like 2 liquidity pushes last week, and I wasn't patient enough. It was my bad. Could have been easily avoided, but you know what happens. Like, it doesn't matter how long you guys have been trading for, you're still gonna get that FOMO and that feeling where you just want to get in. You never really get over it. You just get better at controlling it. But today I didn't have control over it, and it just happens sometimes, unfortunately. Okay, so let's see or I think we had a 10-minute liquidity here too. No, I think that was it. Okay, so this was the liquidity that we looked at this morning. See, this right here kind of threw me off because the candle here was super big and I was like, okay, we'll wait for it. We didn't get in right away, so price kind of pulled back a bit. And this started to look like an okay entry for me. So this right here is this is where the entry should have happened if it was like a good entry. This right here didn't look like a good entry to me because of how the candles were looking. Mainly this prior candle right here. So see the candle right before? See how it's like it's just a huge wick. It's like no body, huge wick, very uncertain candle right there. This kind of gave me a hint that, okay, maybe I should wait for the next retest. This right here is where it tested it initially. And then I waited for it to pull back right here. And this is where I screwed up because I didn't wait for it to retest. I just kind of got in right away. Like when price pushed up right there, that's where I made my entry. And I should have waited more because in order for us to get that retest, you actually need to pull back. So like, for example, here, price touched it, pulled back, and then I actually entered like right here. And I should have waited longer. I should have waited for it to pull back a little more and then wait for it to go back up and then make my entry at some point over here. So this is where I screwed up, Aiden. This is where I made my entry, and that's where I took this loss right here. at 6:33. You can see the timestamp right here. This candle came up at 6:34. I got in like immediately when this candle got close to it because I had a feeling it was going to push up, but I didn't wait for the retest. The retest is basically like you have to have at least some gap in between. Like this wasn't considered a retest because it was like based, in my opinion, because this like was the initial entry. I missed the entry and I waited for it to pull back. I needed to wait for this pullback right here. Like this pullback would have been what I was waiting for. Once I had this, as soon as it would go up, that'd be my retest for entry. So that's why I screwed up because I entered right here. It stopped me out. And then this is where my entry should have been at right here. See, right, came back up. And the market's not always going to be like this. It's just been like this lately because it's just the way that the market's currently moving. And you can see right there, if I just would have waited a little bit longer, one more minute, it would have blasted right through. Luckily, I caught the V1 variation from down here and actually got into my entry from this point down here. And that's how I locked in my recovery plus profit. So I lost 5,000 on the first trade. Second trade, I made 6,000 and then a little more because of the slippage. Slippage worked in my favor. So yeah, Aiden said, okay, so for the retest, you should wait at least a few candles. So it doesn't necessarily need to be a few candles, but you need to wait for the actual pullback. So the thing with this right here, this is where I messed up, was that I didn't wait for any pullback. I just entered right here. So you see how price never pulled back? Like it can't be a retest. It's basically just a continuation of the move that already happened. This kind of just shot up, kind of like you guys can see the big wicks right here. And then at this point, it just kind of went back up. So I wouldn't necessarily see a few candles because it can be like right away too, but it could be like maybe one candle, but it would have to actually pull back like this right here. So you want to see a candle like this, and this is what you want to see before the retracement or for the retest. Because for the retest, you basically just want price to pull away from it. Because this is where you see manipulation, right? So like price initially touches it, comes back up, doesn't actually touch it. Then it gets manipulated to the downside. And then this is the correction back up because we already knew price was going to be bullish this morning since our bias was bullish. And this is like the same thing that's been happening pretty much for the past week. So I wouldn't necessarily say wait a few candles because it can happen like in one candle right here. This wasn't even a few candles. It was basically like one candle and then it ended up coming right back up. Because this could have happened right here. Like it could have happened on this next candle right here. And if you waited, like if you had like a set number for candles to wait for, you would have just missed the entire move. Luckily for this was actually a smooth move. It came up, faked out, stopped me out, and then I got back in on the re-entry right here for the V1 variation. And then I rode it on its way back up. You could also use different clues here. Like the main clue that I knew price was going to come back up was the V1 variation. So this was the main clue right here. That's why I got in early. I could have waited to get in right here. But when I saw this V1 variation, it was also an engulfing candle. You can see how like price kind of came down to this area and then this candle engulfed it. We already knew price was going to go up. So I just looked waiting for that correction. This correction right here gave me the confidence to hop back in. That's why I entered into this trade and I only went in with 100 pip stop loss. My stop loss was right there and my TP was right there. Because I knew for sure that this was going to push up. Like I already knew it was going to push up, but I just didn't know where the entry was or where it was going to actually push up from. Once I saw the V1 variation there, I was like, okay, this is for sure going to go up. And that's where I made my entry there at 639. See the timestamp right here, 639 in between. That's where I made my entry. And then I wrote it up. I could have just wrote it higher. I could have made like double my profit, but it's all good. I wasn't getting greedy there. I just wanted to get in and out with at least break even with the recovery. Yeah, no problem, mate. I know like this stuff isn't like stuff that you'll get right away. Like a lot of this stuff just comes from experience, right? Because I've been seeing these patterns play out every day. Like we already know liquidity is going to play out. It's just a lot of the times the first point of entry is a fake out. And this has been happening for the past week now. The previous weeks before that, like the entire month of May, we had straight wins for liquidity pushes, right? If you look at the results, we didn't have the same problem. We just started having this problem recently because of the news. There was no news last week, so it's a lot of fake outs. This week we have a lot of news, so there's a lot of volatility. But you can see the results here from May. We had like 16 wins and 0 losses, right? It was just straight to TP every time. Even if you got in early or got in late, price would pull back a little bit and go straight through. Unfortunately for us, we just got caught in this right here. And it happens, the market's not always going to do what you're looking for. But as long as you can identify these fake outs, it'll help with making a better entry. So yeah, no problem, Aiden. Let's see. I think there was another question. Following it. So iPhone's asking, how do you know when there's going to be a fake out with liquidity? It seems like it taps entry and goes down stop loss. Then on the second attempt, it smashed the TP. So I know from just from like the past week's market, the market's been the same for the past couple of weeks. So it's not necessarily like something that you can predict. It's just, okay, we already experienced this like for the past, 7 days. Odds of it happening again are very likely until things have changed, where market just starts to move smoother. So you can't really tell like right away, because like, for example, this morning we already knew the price was bullish, right? We had a bullish retail sentiment, we had bullish fundamentals, bullish technicals, everything pointed for a buy. It's just this fake out here just came up. The main reason why I kind of identified this as a fake out too was from the previous candles. So like, for example, this candle right here, whenever you see like weird candles like this that have like no body, it's just a huge wick, this just shows that there's like manipulation happening on this candle, right? Because no candle should ever be like this. If you look at every other candle, there's at least some body, right? Like you look at any candle over here, everything has at least some body. Or even like this, like this would be okay for me. That's like a spinning top or something, or whatever people call it. But this right here is a manipulative candle, because every candle should have at least some body, or it'll be a spinning top, top or bottom, like this right here. This is a manipulative candle, right? And you can see how it gets manipulated. Price comes down, you get a weird candle like that, price reverses all the way up. And it just comes from experience, from just seeing these types of candles like over and over again. Like for example, right here, this is a huge spinning top with a huge wick. Whenever you see unusual candles like that, it's usually a hint that, okay, maybe a fake out might be coming. So that's how I knew this was coming here, but I also knew just because of the market for the past week or so. So I saw this right here. That's why I was like, okay, I'm going to wait for it to retest. Wait for it to retest right here. I made the dumb mistake of entering right away right here, and that's where I got caught. So it's going to come like it's on a day-by-day basis. You can't just like predict it's going to be a fake out. It's like you kind of get a feeling that it's going to be a fake out, and then from there you can make a decision whether you want to wait for the retest or if you want to enter right away. Most of the time, it's better to just wait, because I'd rather just have no trade rather than having a loss when I already had an idea that this was probably going to play out. So, it's a case-by-case basis. It just depends on how the market's moving. Like, for example, tomorrow, if we get these weird candles pre-market, or like right before it hits liquidity, I'm going to expect the same thing, another fake out. But if we get like nice candles, so this is what kind of threw me off the most, was because these candles right here were really good, right? These were perfect candles. Market open right here at 6:30. We had a pretty decent green candle right here. I was like, okay, if this pushes up, well, I actually wanted a pullback or retracement, and then I wanted price to push up right there. But when I saw this candle right here, right next to it, so see how that was a big red candle? So we had a strong green candle. We had that big red candle. That was a retracement candle. That was where I was like, okay, if that becomes the case, I'd actually want that big red candle there, because we can get this to consolidate a bit and then blast right through up. When I saw this big wick, I was like, okay, this candle is not looking good. And that's where I predicted or anticipated the fake outs happen. So, I mean, you guys will see like throughout this week, I'll give more analysis on like the candles pre-market. I'll pay more attention to this. I haven't been paying attention to this very much, but lately it's been beneficial to pay attention to the types of candles that come out before we hit our actual liquidity. Another thing that I looked at that kind of made me not want to take this liquidity as well was that this was a 15-minute liquidity. It was a weak liquidity for me. So I was mentioning, price hit up to this area up here, I'd feel more comfortable. But it is what it is. We all make mistakes. So that's with that question right there. Let me scroll up real quick. And I think those are all the questions for those specific liquidity. I got one question here from Brian. Let me just grab some water real quick. All right, so Brian is asking me, he said, hi, Sean, may I ask for the 1 minute variation wick for body rejection? Can it be this? So Brian sent me a screenshot. Let me zoom into this a little bit. Yeah, this looks like a V1 variation right here. Yeah, looks fine. So for this entry right here, Brian, this would be the V1 variation. So like, for example, you see how price is pushing up, you have the double body rejection. You're focusing on these two candles right here, not the red one, but these two right here. So see how there's a higher high, you'd focus on this green one and this red candle, your entry would be right here. So before this candle dropped, that'd be your entry and it would go straight to your TP. So yeah, this right here is a proper entry for a V1 variation. The one thing that you want to make sure that you confirm as well is the direction of bias though. So I don't know if this is from today. Let me see if they have a timestamp on it. So I'm not sure if this is from, I know we're on a different time zone too. So I'm not sure if this is from today or if this was from a previous day. Okay. Yeah, so this was from today. I'm not sure what the bias was at that time. So you just want to make sure that you have a bearish bias, you know, at the time of entry. From today, I just remember that we had a bullish bias. So I'm not sure if I would have taken, you know, that one specifically. There's another V1 variation right here for a buy. See how these two are double bodies? So I would have taken this right here for a buy. And obviously this would have hit your TP. Oops. Let me see if I could fix this. Okay. Let's color this a different color. Yeah, so this right here would be a V1 variation right here for a buy. So I'm not sure what the bias was today. I know from this morning, if you were trading during the live session, we had a bullish bias. So there'd be a couple of V1 variations right here. The V1 right here. See, there's double body and double wick. You would take the buy there, and we go straight to your TP. So I don't think the bias was bearish today, so I wouldn't have taken that trade. But if there was a bearish bias, then you would take it. But the bias was bullish today, so you have one right here. You have one right there, double body, you go straight to TP. And then another one right here, double body, and it goes straight to its profit target. So, but you do have the pattern right, Brian. So you do have the pattern right, you know, depending on where the higher high, or it doesn't have to be a higher high. It could be a high, low, lower high, higher low, higher high, lower low, any of that stuff, any high, low. As long as you have a double body next to it and a pending momentum, you can take the trade. So depending on what the bias was here, you did identify it properly, but I can't confirm what the bias was at that specific time. But yeah, if you have any other questions regarding that, Brian, just let me know and I'll see if I can find, you know, more examples for you. But back testing a V1 is kind of difficult because I can't tell what the bias was for that specific time. I'm assuming it was a buy though, because if you look over here at retail sentiment, it's currently 66% short. So I'm pretty sure it was still bullish throughout the day. Let me just refresh this too. Yeah, the fundamentals are up 189 points. Looking over here, it looks like it was pretty much bullish all morning today. Yeah, for the most part, it was bullish. So it looks like you'd probably be looking for buys that day or around that time. Pretty much all session today. All right, so that's it with Brian's question right there. Let me scroll down a little bit. Okay, so I think that's it with that right there. Brian, if there's any other questions, let me know. I know we're trying to I want to try to knock out as many questions as I can from you because we have like opposite time zones. So it's hard for you to get on. But yeah, if there's any other questions, you know, let me know. If you have a list of questions, we'll go over every question you have. Just make sure that you're understanding everything. Let's see. So Brian said, all right, thank you, Sean. By the way, may I know which date of the live mentoring session teaches liquidity push? So I can't remember the specific dates, but if you go back to the beginning of May, I think from the first mentoring session of May up until the end of the month, I went over liquidity push pretty much every session. If we have time today, I can go over Okay, perfect. Yeah. If I have time today, I can show you some more examples too of how I apply it. But Hussein over here mentioned that May 1st mentoring session has good content for the liquidity push. Thanks, Hussein. Yeah. So if you want to go back and rewatch that later, you can rewatch that. If we have time today, which I think we will, I'll show you the breakdown of the liquidity push. So, all right. So that's it with that right now. Next question over here is from Sam. So Sam, I think you're still here. Sam is asking for a review of S&P. So, I mean, S&P moves pretty much similar to US 30, so it's going to be pretty much same analysis. I'm trying to think what the TS. There we go. Okay, so let's just do a full analysis of S&P right now. So looking at the S&P at the moment, let's do a full analysis of the market currently. I mean, the analysis is going to be the same as US 30. It mirrors US 30, so it's pretty much going to do the same thing. So you can, I mean, US 30 is bullish, obviously. We're expecting to be bullish this week. I'm expecting S&P to be bullish as well. So looking over here, you can see from the shorter time frames, price is bullish, and we can confirm that by looking at where price is currently at. As you can see over here, price is above the pivots across the 1 minute, 5 minute, and 10-minute time frames. The trend meter down below is green on all time frames, and the pivots are angling up very strongly. So with that said, we have a bullish bias on the short time frames. On the longer time frames, 30-minute, 1 hour, and 4 hour, you can see that price is also above the pivots. Trend meter is green, pivots are angling up. It's obviously in a bullish trend. So S&P is currently in a very strong bullish trend. We'll take a look at retail sentiment. All right, so retail sentiment over here for S&P is same thing. It lines up with US 30. So as you can see over here on retail sentiment, it is currently 71% short. This is like way stronger. So, you know, I forgot who mentioned it during the live session today, like visual like always has like something to say that like contradicts what I'm explaining. And he said that like retail sentiment has nothing to do with like scalping, right? Retail sentiment here was 71% short. I don't know how much more can I explain to you guys? Like, okay, this entire morning session, if retail sentiment doesn't play a role, I don't understand like how this doesn't play a role here. Because obviously, if it's 71% short, I'm gonna be looking for some buys, and price went all the way up today. So guys, just keep this in mind. Like people are gonna have their own opinions in the group, which is completely fine. It doesn't bother me, but make sure that you guys like double check it, right? Because some people will say like, oh, retail sentiment doesn't make sense, or it doesn't matter for scalping. I mean, it makes perfect sense right here. As you guys can see the market. I don't know why you wouldn't use retail sentiment to confirm a trade. You know, I've been doing this for a while, and I get like, I can't tell if people are trolling in the group or they're just, if they have a real, like if they're like really backing their statement. Because what will happen is like someone will say something, and then I'll explain my side, and then they have nothing else to say to like they just get all quiet. So it's okay to have your own opinion, guys, but if you guys are listening to other people's opinions in the group, just make sure that you actually confirm it yourself, because obviously you can see right here, sentiment's been down, like, so the change over here has been pretty heavy. It only changed 3%. So like yesterday or this morning, sentiment was at like 69%. And I would say here that it had a huge impact, because if you had a sentiment that was 69% and you're basically looking for buys here, I would be looking for buys. Like I would still use a sentiment in my favor. So anyways, back to our analysis here. I just wanted to confirm that, guys, because I know a lot of people have like stuff to say sometimes in the chat, and some people listen to what they're saying and then it throws people off. And I don't mind it. It's just, I don't want other people to get confused in the chat. So if you guys want to listen to my analysis, great. If you want to listen to someone else's analysis, that's also great. But just make sure that you guys are doing your own analysis, you know, on your own to confirm it. Don't just listen to what I say, and don't just listen to what other people say in the chat or in the group, because you guys got to make sure that you understand what you're looking at, and you're not just basing things off like what other people are saying. Anyways, back to S&P, bullish here for the trend, bullish retail sentiment. You can see over here that it is also bullish. It was up 40 points. It wasn't very strong, but it was up 40 points for S&P. So with that said, strong bullish bias, exactly how it was with US 30. And I mean, with that said, I think price will continue to be bullish. If you look on the higher time frames, I mean, it just depends on like what you're trading on, Sam. If there's anything specific that you're looking for, it's at an all-time high. So I can't give you another price point. This is the all-time high of the 52-week. So I can't necessarily say where it's going to push up to. I mean, I think it's going to push up higher. But as you can see over here on the 4-hour time frame, price is very overextended. So, I mean, I don't even see any. Where's the next zone at? Like price hasn't been up here for a very long time. Like for like over a year. The last time price was this high was in March of 2022. So over a year ago, price was up this high. The next level price to retest or to test, I guess, this is a weekly time frame. Next level to test would be up here. So if you're looking for the next level, it'd be up at this point. But the thing that you want to be careful for is the retracement, because price is very overextended at this point. And you know, I don't know when this is going to come down. It's going to have to come down eventually. It can't just keep pushing up forever. But you can see over here that price is very overextended. So like price is pushed up from this point right here, it hasn't retraced. Well, I mean, it has retraced, but not very strong. It just kind of pulled back a little bit. You have price pull up, retrace, pull up, retrace, pull up. So this trend has been pushing up since, let's see. This trend has been pushing up since May 24th. So it hasn't been that long, actually. It's only been like 2 or 3 weeks. But the price has pushed up about 1,107 points, which is equivalent to, I mean, I don't trade S&P, so I can't really say, but if we're doing this in comparison to US 30, that's about 11,000 pips, which is, that's a lot of pips. You typically get like maybe 1,000 pips a day. So 11,000 pips, that's pretty overextended. So just looking at this here, Sam, I do see a retracement happening sometime soon, because even for example, right here, this is the next level where price pushed up from. Hasn't retraced yet, right? So price is pushed up right here. It's probably going to retrace down to, and you can just look at previous retracements here. Price will push up, it retraces to the bottom of the pivots. It pushes up, retraces to the middle of the pivots. So if there's a retracement that happens here, like say tomorrow, price can retrace to either the middle of the pivots or the bottom of the pivots. So I will probably wait for the retracement and then look for maybe a V1 variation for a correction to the upside. Because you can see over here, so price pushes up, comes down for retracement. There's no V1 variation here for confirmation, but actually, no, there wasn't. There was a V1 variation right here though, or close actually. It wasn't like super tight, but it was pretty close. There was one right here, V1 variation if you went for a 1-to-1. It'd be right there, 360 pips straight to TP. And then another V1 variation over here. Or actually, no, this isn't a V1, this is a V2 variation. V2 variation right there. There's a lower low with a red candle, followed by a green candle right here, moderate green candle, and then it pushes right through. So what I would look for here, Sam, is if you're looking for that retracement, I would wait for it to retrace down a little bit, and then look for maybe a V1 or V2 variation somewhere around here, possibly bouncing off one of the pivots. And if you get a rejection off the pivot with the V1 or V2 variation, it's going to confirm a push back to the upside. Okay. That's kind of what I see happening here. Obviously, I'm expecting it to be bullish. Tomorrow we have news. We have CPI. CPI and core CPI month over month and year over year. So that's something to be careful for. It's right here for tomorrow. We have CPI month over month, CPI year over year. Last month was 0.4%. This month they're forecasting it to be less. Same with year over year as well as 4.9%. They're forecasting to be 4.1. If you want to know how to read the news, just click on this tab right here, and then it'll show you here actual greater than forecast is good for currency. Lesser is going to be worse, right? So for example, right here, their forecast to be 4.1. Say, for example, it's 4.3 tomorrow. That's going to be good. It's going to push price up. And then vice versa, it's 4.1 here forecasted. If it becomes like 3.9 and it's red, then price is probably going to come down. So that's probably going to be the catalyst for price to come down slightly. And then when it comes down, it's going to look for, you're going to look for that retrace or that correction. Look for the retracement, look for a V1 variation down here, V2. And then from there, you can take the buy and continue riding it up higher. Because the next level for it to test is like pretty far out. It's going to be up there. So it's still got a long way to go. About 700 points. So to the next level, which is 7,000 pips. It's got a long way to go. So that's all I can say for S&P right now. You'll have to see how price reacts to the news tomorrow. Hopefully it reacts to it in a negative way. And then from there, you can catch the correction back to the upside. But I do expect price to continue pushing up for the rest of the week because we do have Fed news on Wednesday over here. So we have the FOMC economic projections. They're going to basically explain what they expect to happen in the next month or so. We are going to recession, so it's not necessarily going to be all good news, but they're going to have some good things to say because the federal funds rate, they've already mentioned that they're not going to increase it. So that's good for the economy. So with that said, they're going to have a couple bad things to say that we're going to a recession or we're slowly getting into a recession. But the good thing is going to be that the Fed's fund rate is not going up. So that's going to kind of counterbalance it out. So well, basically what I'd look for here is retracement and then look for a reversal pattern like a V1 or V2 variation. And then from there, you can ride it back up further. And I think that's about it for S&P. If there's any other questions regarding that, Sam, just let me know. But I can't really say too much because news tomorrow is going to be very unpredictable. I mean, it's predictable, but unpredictable how the market is going to react to it. I'm expecting it to be not great news, but doesn't necessarily mean price is going to go up. So that's it with S&P right there. Let me go back to US 30. And then I'll answer the next question here on the list. All right, so next question on the list is from Glenn. Glenn's asking, I want to ask regarding the liquidity entered earlier today, why the 610 high not marked as liquidity prior to open. Honestly, I don't know, Glenn. I noticed that too. I don't know why we missed it, but I don't think I had that marked up on mine either. Yeah. So I didn't even have the 30-minute liquidity that was marked up right here. I had the 15, but not the 30-minute that was right there. I think we might have just missed it while we were marking liquidity this morning, but I didn't specifically avoid it. I just didn't have it marked up on my chart. We had it marked up right now when we marked it up the second time for my second review, but we didn't have it marked up this morning. It wasn't done purposely. I just didn't see it. I probably overlooked it when I was marking up the liquidity this morning. All right, let's see. New question from Chase. Chase is asking, can we go over FTMO new update that will be reducing the leverage for US equities on June 16th? So I haven't even heard of that yet, Chase. So I have actually actually I have no idea what you're talking about. Let me check if I got the email. I'm assuming they sent you an email and that's how you knew about it. I might have gotten the email, but I probably just deleted it because I didn't bother looking at it. But I do not see the email here from FTMO. If you have an article or something that we can look at, Chase, I can take a look at it, but So I'm on the FTMO website right now. I don't see any update from it. It might be on the blog. Let me check the blog posts. The only thing I can see right now is their trading objectives that are changing from 10 to 4 days. Hmm. Let me check out their blog. It's funny. We've been scalping for like years now, and everybody's trying to get into scalping. I just saw this article from FTMO. It says how to develop a scalping strategy because this we're in a scalping market, and it's like people are slowly like realizing that we're in a scalping market, but we've been scalping for like years now. Like to me personally, I think scalping is the best way to trade because you get in and out really quickly. It's not for the faint of heart. Obviously, you have to know what you're doing, but I've seen a lot of like these other companies and stuff. Everybody's trying to get into scalping now, but it's not like scalping is a brand new thing. This thing's been going on for like forever. And for us, we've been using this for years now. But going back to your question, Chase, I don't see the no email. I just looked at updates. All right, let me see. Did you send it to me, Chase? I don't see it over here. So you said no email. I just looked at updates. Where are the updates at? Because something like that is a pretty big deal. Like they should, okay, trading updates. Is that what it's called? Or where it's at? So I think by equities, they mean stocks, Chase. I don't think it's for US 30. So when they talk about US equities, let's see, US and EU equities will have the margin requirement increased. Your standard account. Um, okay, for US 30. Oh, did they say that, Chase? I just saw your message. You deleted it. I can read it. Um, so I can't say for sure. I didn't even know they were having this on the 20th. Usually they send an email out. I probably missed it, but okay, so it's starting from Monday, June, or yeah, Monday, 19th of June, US equities and EU equities will have their margin requirement increased to 30% for standard accounts and to 100% in cases that's a lot, like for this right here. Huh. Okay. So Chase said he contacted FTMO and they said US 30 will be 1 to 3 on the 16th. Gotcha. Okay. Yeah, I didn't even see the update for that. So I can't say for sure. Chase, I mean, I guess we'll have to wait and see. I don't think it's going to affect it too much because if it's only up 30%, that's not like a huge increase. Like right now, I'm on a 200 lot on FTMO. So if anything, it might lower my max lot to like maybe 150. But a 30% increase isn't too much for a standard. For the swing, though, it's a big difference. It says they're increasing it 100% for swing accounts. So this right here will definitely, you'll feel this on a swing account, but I can't see say what it would be for. Oh, is that what they told you, Chase? So Chase said that the max lot will be at 8.80 on a 200K count. Do you know like what the stop loss? Because the margin requirement, it depends on your stop loss too. It's not just like by lot size. So, because like, for example, if I enter a trade and my stop loss is more than like 300 pips, I can't put a 200 lot, but I think I can still put more than a 200 lot if my stop loss was tighter. So if my stop loss was like 100 pips, I could probably go higher than 200 lots. But yeah, I think we might be digging in a little too deep to this, Chase. I mean, I wish I could answer your question, but honestly, I have no idea. Um, I know the leverage is different on, well, I don't even know if the leverage is different on MFF. I don't know if the leverage is different or they just have a lot size cap. But Let's see. Chase said they told me to use a margin calculator and calculated it comes down to 880. 880. I don't think that's going to be the case yet. Like personally, I don't think that'll be the case because going down from a 200 lot to an 8 lot, that's like a huge jump, right? Like going between. Like if that was the case, I don't think anybody would trade on FTMO anymore because that leverage is like crazy. Like going from a 200 max lot to an 8 lot. I mean, we could be wrong, we could be right. I have no idea, but uh, they if that's the case, Chase, I think they might be releasing a new type of account for FTMO because I've noticed with a lot of other funding companies, they have like a specific account that's only for scalping. From what I heard, I don't know personally, but from what I heard from other people, there's like other funding companies that have like their own a special account just for scalping. So I think if that's the case and they increase margin like that, they might be introducing a new type of funding account, which is only for scalping, where the leverage will be higher, but it's going to be a smaller account size. Yeah, but this is all new news to me, Chase. I didn't even know that this was happening. Because it's just, yeah, it sounds crazy. Like I can't see anybody trading on FTMO if they're like maxing your lot size at 8 lots. It just doesn't make any sense. Because even for day trading, you would need at least like 30 lots. Like if you look at anybody who trades on any other broker, like 8 lots is like extremely little. If you think about it, like if I was to do the math right here, so 8 lots, or you said 8.80, right? 8.80. That's crazy. There's no way, Chase. That's like, there's no freaking way. Maybe 88 lots. Because if you put 8 lots on your quick trade, I'm only making 200 bucks per trade, $264 per trade. That's like, there's no way. I wouldn't even be trading on FTO anymore. I would just go open my own personal account at that point. Okay, let's do 88.8. 88.8, I'm still making about like 2,600. So that's kind of like manageable. But I don't think that would, I don't know. I could be wrong, but I don't think that would really because the thing is FTMO still makes money on people failing their challenges, right? So if they make leverage that tight, nobody's gonna fail their account. And then they're just not gonna make money off people like how they normally do. So I don't know. We could talk about this all day, Chase, because it does sound pretty crazy for them to do that because it just wouldn't make sense, right? These funding companies want to make money off people losing, and then they want to make money off people winning. So obviously, the people winning, they're going to make money off copying their trades, and then people losing, they're going to make more money from people paying for challenges. So it just sounds crazy. Like it doesn't sound like a if like FTMO was like for example, if I was to create an actual prop firm, that would be my thing. Like I would have it set to something like that because I'm like banking on people to win trades and not blow accounts. But for a funding company where people are paying for challenges, you'd expect them to want they want a certain amount of people to fail because that's going to give them a bankroll for them to pay out for people who are actually getting payouts, right? So I don't know. We'll see in the next couple of days, Chase, because that's in about a week away. So it's June 12th right now. Chase said that they're going to be changing the settings on June 16th. I mean, I guess we'll see. I'm hoping you're wrong. Not to like downplay your calculation and stuff, but I'm really hoping you're wrong. Because if that's the case, I'm gonna have to go find another funding company to trade with on top of my FTMO. Or what I might have to do is I'm gonna have to split up my accounts. I can't just have a 200K account. I'll split it up into multiple accounts so I can take different types of trades. But we'll see. But no, thanks for bringing that up, Chase. I had no idea. Usually they send out an email about that. So that's a big change, but I haven't heard of it. Gotcha. Okay, yes. Chase said test it out on their margin calculator. They said it's due to risk. I think something is going on with them internally, which is why they reduced days to 4. Yeah, maybe. But yeah, let's hope that we're all wrong with that. But yeah, I don't think FTMO would do anything like that personally because they're the gold standard right now. So if they're making changes like that, then yeah, something might be wrong internally. But I don't know. It just doesn't make sense for a funny company to do that. Like if I had a funny company and I knew like 80% of people suck at trading, I would actually want more strict requirements and I would give them more leverage so that they just keep blowing accounts, right? You keep blowing accounts, pay for challenges, and then you make money from that. And then you have these A-book traders, like the 10-20% of people who are actually profitable. And then those people would go under that plan that you just mentioned. So I don't know. We'll see. We'll see how it plays out. All right, let's see. Last question is from Barty over here. Barty's asking, yo, Sean, can you mark the liquidity? Because I will look at the levels because of CPI and you might be sleeping. So can you help? So I wouldn't really mark liquidity right now, Barty, because the market's still open. You should probably mark liquidity tomorrow morning. I mean, I'm going to be away. Let me see. When the CPI news? Actually, okay, so that's what you mean. Because CPI comes out pre-market. Okay, so I'll mark up liquidity for you here. And I'll use this, or I'll just mark it up and you can kind of see where it's at, I guess. But the thing with this, I mean, it's gonna be hard. I don't know how you're gonna copy my liquidity, Barty, because the thing is, you're only gonna see so many liquidity points here. So hey, Barty, message in the YouTube if you're paying attention so that I can mark up liquidity and then you can just identify it the same way that we do. Because I don't want to mark it up and then you're not actually looking at the chart and you can't copy my levels of liquidity. So just pop into the chat, Barty, like if you see this message or if you hear me, so that I can mark up liquidity for you and then you can take a look. But I don't think this is going to be helpful for you because the levels are going to get hit. Okay, so there's Barty right there. All right, so let's start off with the daily over here. I'm going to mark the levels of liquidity over here for Barty real quick, guys. Just so that he can see where, liquidity is sitting for tomorrow. So here are the daily levels. Barty, I'll just give you a few moments there to take a look at that. And then I'll go over to the next levels. Actually, you'll be able to like replay this later anyways. So here are the daily levels right there. I'll just leave it there for a few moments so that you can see. And then later you can always just replay this mentoring session. So there goes the daily levels. And then now I'll go over to the 8-hour time frame. All right, now let me mark the levels here for you. Right there, right there, right there, and right there. Yeah, there goes the 8-hour levels right there, Barty. And now let's go over to the 4-hour. So you guys can see how convenient it is to have the indicators because you can just mark them up yourself. But Barty doesn't have the indicators yet, so I'm going to help him identify these levels for tomorrow since he will be trading CPI. All right, there's no levels here for the 4-hour. Let me go down to the 2-hour here. All right, again, right here, Barty. See, we got these levels down here. You got a lot of liquidity on the bottom side. All right, so there goes the levels for the 2-hour. Now let's go down to the 1-hour. Right there. Right there. All right, that's it for the 1-hour right there. Let's go down to the 30-minute. One right there. One right there, right there, right there, right there. That's it for the 30-minute. Here's the 15-minute now. Got one right there. One right there. one right there, one right there. Now down to the 10-minute. One right there. And that is it right there. So there you go, Barty. Yeah, if you want to go back and review the zones, just go back and watch the replay. But for the most part, it looks like most of the liquidity is on the bottom side, Barty. So I don't know if you're gonna have liquidity up top. I don't really. Well, there's one level right here, and I think that's it. There's like one level that's at 34,551. This might get hit by London session though, because it's pretty close. But there's a lot of liquidity down here on the bottom. So I'm expecting the CPI news to be negative. So if the CPI news is negative, Barty, it's probably going to come down and knock out this liquidity here. Maybe this level or down here. And then I think by the time we get to New York Open tomorrow for the liquidity push, it's probably going to correct back up. So just something to be careful for there. But I do think the CPI news is probably going to be negative. I'm not going to trade CPI news. It's too hectic. I don't like trading high impact news like that. It's just it's too risky on my end. But yeah, if you want to trade it, I'm expecting the liquidity down here to get knocked out. So something to look out for. All right, Hussein said he had a chat with the FTMO representative about leverage, and they said it's for equities, not for indices. So yeah, Chase, Hussein just talked with FTMO. They said that it's not for US 30, it's just for stocks. Equities is in stocks, like if you're trading Apple or AMD or whatever stocks they have on the list. Chase said that they said something about US 30, but I don't know. Well, I guess we'll see what happens in the next couple of days on the 16th. But I guess we'll see. So hopefully that's the case, Hussein. I'm siding with Hussein on this one because I'm hoping that they don't mess with it. Because if they mess with it, then it's going to be a game changer for US 30. I might have to go find another funny company to use as my main account. All right, one question from Brian. Brian's asking, Sean, may I ask, do you have any books to recommend to gain more knowledge? Yes. So let me show you I'm gonna pull up my Audible. These are my books that I personally listen to. I used to listen to a book a month, but it's just not necessary for me because I kind of have my trade psychology down. So it's not really something that I need to work on. But for you guys here, so let's see, Brian. So the first book that you should listen to or read, and I'm pretty sure you've already listened to it. It's this not working. Sorry, let me refresh this. Okay, so the first book that you should probably read or listen to, Jeff, is going to be Trading in the Zone. If you've never listened or read Trading in the Zone, this is going to be number one. Trading in the Zone, master the market with confidence, discipline, and a winning attitude. This is exactly what kind of got me set. Like once I listened to this book and read it, this kind of put me on like next level with my trade psychology. After this book, the next book that I'd recommend is this book right here. It's called One Good Trade, and I'm just I'll maximize these so you can see it better. So this is the first book, this is the second book, and once you're like kind of like good, then the daily trading coach should be good. It's just psychology lessons from like one of the most well-known psychologists who he pretty much a bunch of hedge funds and prop firms hire this guy to pretty much coach their own traders. So, and then Market Wizards is also a good book too. So here, I'll put these in order right here. So Trading in the Zone is going to be number one. This right here helps with like just, getting out of your head and just like really executing trades and following your trading plan. The next book would be One Good Trade. The writer of this book, he pretty much runs one of like the most well-known prop firms out there. It's like a legit prop firm. It's called S&P Capital. For them, like at their firm, all they aim for is one good trade, right? They want all of their prop traders to just trade one good trade. This is like a really well-known prop firm in New York. It's kind of like what we do, right? You take the liquidity push, that's one good trade. You take one good liquidity push, and you're good, right? That's basically what they do here. They're like, it doesn't matter what trade you take, as long as the trade falls within your parameters and it follows your requirements. If you take one good trade a day, whether it wins or loses, you're good to go. So this is going to be like book number 2. And then book number 3 is going to be the Daily Trading Coach right here by Brett Steenbarger. This guy's he's one of like the most well-known trading psychologists that has pretty much trained like some of the best traders in the world. And he still does like training for hedge funds and prop firms like all over the world. So these 3 books are good for trade psychology. And then if you want to like, this is like an interesting book that I like to listen to. I like to listen to all of the Market Wizards books by Jack Schwager. He pretty much interviews like some of the best traders in the world that you basically have never heard of. Like, for example, me, for example, right? You guys see how I trade every day. I'm a really good trader, but not a lot of people have heard of me. I try to stay under the radar because I don't want people to really know what I'm doing. I don't mind sharing with you guys, but I don't really want to be like, I don't want to be on YouTube with like 1 million views and then everybody's copying my strategy, right? So this is another good book to read because then you can get into the mindset of like some of like the world's greatest traders that you've never heard of. Like they haven't been like on Wall Street. They just kind of trade on their own and they make millions and millions of dollars trading their own trading strategy without really sharing it with the world. So another good book to listen to here. So that's pretty much the 3 books that I would recommend. This book, Trading the Zone, One Good Trade, Daily Trading Coach, and this whole series. There's Market Wizards, which are like the traders that are known, and then Unknown Market Wizards are like the traders that people haven't really heard of. Other than that, let's see. Yeah, so Cern over here messaged, or he got in touch with the FTMO customer service too. He said, we do not have any restrictions on lot sizes or position volumes. Therefore, you can place any lot size you want as long as you have enough margin. Be sure to control your account exposure and monitor your equity to stay within the permitted drawdowns. Yeah, so yeah, hopefully that's the case. Chase, where like it's not affected, but I mean, we'll see. We'll see what happens in the next couple of days if our lot sizes get capped on FTMO. Yeah, thanks, Surin, Hussein, and Chase for checking in on that. I mean, we'll see what happens in the next couple of days, but hopefully they don't make any changes to it because I think that they're pretty solid as is right now. Barty said, now time has come for Kodi Kai proper. I'm actually gonna have I'm going to dinner with one of these prop firm owners later tonight. So yeah, after this live session, I'm actually going to go to dinner with one of the owners of one of the prop firms. We're going to talk business. I'm going to try to get in touch with their liquidity provider, and then hopefully we can, probably get the ball rolling with our prop firm here. But again, like I mentioned, our prop firm here is not going to be like FTMO. Like you can't just sign up. It's going to be a prop firm where you're going to be trading my strategies, basically like liquidity push and stuff like that. And we're just all going to make money together because I'm going to make sure that you guys are like on point with trading, because obviously the more money you guys make trading, the more money the firm makes. So yeah, that's actually where I'm going right now after this. So once we're wrapped up with this, I'm gonna go get ready for dinner. I'm gonna go grab dinner and then talk about ways that I can work with their liquidity provider. And I'm probably gonna trade one of their accounts too. They just want me to trade one of their accounts for their investors. So it's gonna be a win-win for both of us. For all of us, actually, if we can get this stuff going. So, all right, guys, I think that's it for today. If there's any other questions, guys, feel free to reach out. Otherwise, I think I've answered everybody's questions. If I missed any questions, guys, just pop into the chat right now, put your question in there. I don't think I missed any questions, but if I did, just let me know, and then I can help you guys out. Otherwise, just a reminder, guys, if you guys have access to the strategies or any indicators, I'm doing one-on-one mentoring sessions again. I don't know for how long, but I'll do them for as long as I can. I got a couple lined up this week. So depending if they want them to be public, then I'll have them live streamed. If not, they're just going to be private, and it's just going to be one-on-one with that specific person. So All right, guys, I think that's it for the questions. If you guys have any other questions, feel free to reach out. You guys can email me, Sean@KodiKaiTrades.com, or you guys can message me on Telegram. Again, guys, just a reminder, I'll never message you first on Telegram. So if you guys get a message from someone that looks like me, it's probably not me. It's 100% not me, actually. So don't send them any Bitcoin, don't send them any Zells, don't send them any money. If you're going to pay for anything, go through the website. Don't go through any other place, because I don't want you guys to get scammed, and that's the last thing I want for you guys. All right, guys. So I think that's it. Otherwise, if you guys have any questions, reach out, and I'll see you guys back here tomorrow for the next.